Good morning and welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at MarketSite is JJ Kinaghan. He's the chief market strategist over at TD Ameritrade, and we're going to take a look at the monthly reading of the Investor Movement Index, what we call the IMX. We're going to be talking about June, halfway through the year. JJ, as always, thank you for joining me at MarketSite. And it's interesting to see that out of the 11 million trading accounts over at TD Ameritrade, clients actually used volatility to gain exposure to equities for June.
Yeah, they did, and one of the things that we saw is they used some of the names that maybe even were a little bit more volatile, like an AT&T or a Netflix. So clients, slowly but surely measuring how they sort of get into the market, if you will. That's the biggest pattern we've seen this year, as you know, first 4 months of the year, saw clients kind of take less exposure. Now starting to take a little bit more exposure 2 months in a row. And as the market's been a little bit more volatile, particularly day to day, if you will.
Well, it was fortuitous for them to use that volatility because as we're speaking now, we're just right about all-time highs on all three major averages. So it was great timing on their part.
It was great timing on their part. And as I said, they also sold some of the stocks, though, that I will say have had a little bit more volatility associated with them. What I mean by that particularly is the energy stocks, the Exxon Mobils, the Chesapeakes. So some of those stocks that, because crude oil has been a little bit, as you know, reporting on it every day, crazy over the last month and a half, as those stocks have rallied back, as oil, had that 10% to the upside move, as it started to, some of our clients said, okay, we've had our exposure there. Let's get out of this and let's go to some things that seem a little bit more stable.
Well, let's look at a 2018 mid-year review because it certainly looked very different than the IMX did in 2017, and it seems to have all started in February, again, using more measured metrics to take positions in the market.
Yeah, and I think one of the things that stands out, and as you talked about before we started, Facebook being a sell 5 of the 6 months so far this year. And so I think that that's really interesting, and that's kind of driven by our more traditional client. Actually, our millennials haven't been as aggressive sellers of Facebook as have our more mature or total client base, if you will. AT&T being one of the buys so far this year. So again, kind of a mixed bag, but and Netflix has been a buy all year long. Our clients have been on Netflix. They've been handsomely rewarded by being involved with Netflix, but it's been a favorite of our clients so far this year.
Let's look at your second half outlook, because even though the markets are sitting pretty close to all-time highs, it feels as if the sentiment underneath, there is a lot of uncertainty. We can't ignore the macro headlines that are out there.
No, you can't. And you and I sit here talking right now, yes, we're having a great day. The Dow, just as we sat down, up about 200, S&Ps are up about 19. But that being said, driven by Friday's employment report, the tariffs are still going to overhang there. We start earnings at the end of this week, and I think it's going to be really interesting. I don't think there can be a single CEO who's not going to be asked about that in one frame or another. We have the 6 big banks reporting Thursday and Friday. What I'm really interested in there is not even so much tariffs. What are they going to say about this yield curve? Last night we had the lowest we've seen since 2007 in terms of the steepness of the yield curve. So I'm sure they're going to be asked about long-term rates. This morning bonds are down a little bit. Rates on the long end are up a little bit. But this is going to be a problem for the banks if we don't get some sort of steepness to the yield curve, if we don't get the 10-year above 3%. So I think that's one thing we want to hear. And we want to hear, as I said, from many of the other companies, how they think tariffs might affect them.
Right.
It's one of the reasons actually technology looks so attractive to people, and the Netflix, et cetera, people like, because a lot of the technology companies have either already been replicated in China or are so very specific, they're very difficult to replicate in the short term, so you still need their services.
Well, it's interesting that you say that as well, because financials and industrials that are really 2 key components of moving the market have really underperformed. So again, like what you were saying, going back to earnings, what the banks say on Friday, what the industrials, how they look forward-looking with their quarters, that can make a big difference, because if the market takes a positive view on it, you could also get some juice from there as well.
Absolutely, and you hit on something earlier I think that's really important. We're near all-time highs, but it's like the person who won the lottery and all I want to talk about is the taxes they have to pay.
Right.
Everyone has sort of a, oh my God, waiting for that next shoe to drop. So I think it's important. This is a really important quarter for earnings, in my opinion, to see if the CEOs come out with that same positive positivity, if that's a word, they had at the end of last year, where it was like, we see great growth, we see this continuing, or we're back to 2.5 years ago where it was, okay, we can continue at this pace, we don't know that we'll necessarily grow earnings, so we really want to see, because the CEOs, I think, will set the tone for what happens here in the second half of the year.
All right, well, thank you as always for joining me at MarketSite.
Always a pleasure.
And thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.